computer. All right, Kevin. We are recording.
We're live.
All right. All right, everybody. Albert Pavon with Pavon Realty Group. I am bringing to you once again Kevin Coleman with SWBC. And we're going through some real difficult times right now. And I am getting a lot of questions, emails, people just asking me what's happening with the market. Are we going to see another, 2008, 2009, 2010? Because it's obviously on top of everybody's mind, But I wanted to do a video now with the whole social distancing thing. We have to do it through Zoom. But I wanted to just ask you a few questions on the lending side that I can send this out to the current clients who are asking me these questions and share with other people. So I really appreciate you taking the time. I know you're busy as heck.
Absolutely. Thank you for the invite.
Yeah. So, this won't be like a Fox or CNN interview. So we're much we're much lower budget here, but
yeah.
But I do.
We're going to talk on the real level of what's going on.
And I want to be able to give out a positive message because these are difficult times. So let's start. What are you seeing right now as far as loan applications? Are you seeing an increase or are you seeing a decrease? I know a couple of weeks ago, the stock market was going crazy. Interest rates were up and down. With you personally right now, what are you seeing with your company?
Well, that's a good question. And as crazy as it's going to sound, I've actually seen the most volume that I've done in the mortgage industry over the last 45 days and 14 years. Now, a lot of it has to do with interest rates. That's been a key factor in all of this. Interest rates are close to record low levels. And anybody who's basically did a mortgage between, I'd say 2012 and mid-year 2019, really can take advantage of looking into refinancing to get a lower interest rate, because the interest rates at the end of 2012 were at this level, but they haven't been at this level since then, and that's where they're at today. Now, on the flip side with purchases, as surprising as that sounds too, every Monday when I walk into my office, I still have 2, 3, 4 new purchase contracts from folks who've gone out over the weekend looking at homes and such. So it's been if not steady level, a huge increase due to the fluctuation of refinances that have been taking place over the last 2.5 to 3 weeks.
Yeah. Well, I mean, they are considering us an essential business, so they do allow us to show homes. We've taken a lot of precautions on how we actually show a home now.
Oh, absolutely.
Yeah. So, I mean, this won't be a video on that. Right now, I want to focus on the lending side of it, but it's good to know that, hey, you are still seeing movement. We haven't come to a stall. And if people are getting loans, that means inventory is moving. So
absolutely, and that's what's most important.
That's great news. I like that. So what are some of the big changes that you're currently seeing on the lending side right now? And I'm referring to FHA, VA, jumbo loans. I know we know what's happening with rates, but what about appraisals? I mean, now there's a lot going on.
There is so much to take in at once. It's not comparable to anything that's really ever happened before, because we're all in the unknown together. There's a virus that's going around that a lot of people are scared of and we don't know a lot about, and we're learning. It's really, I know this is going to sound crazy, but it's a day-to-day operation on it. In terms of conventional loans, the great news is not only has it been business as usual, but due to the fact that conventional loans, the rates are at record low levels and everything else, they're still going through from start to finish, call it 3 weeks. Appraisals on conventional loans, they've come out with lots of alternatives to where that you can either do a desktop appraisal for the purchase, which is basically the appraiser gathering the information from the MLS and the most recent comps and such, which the MLS is what you use. In terms of, and even refinances, in some cases they won't allow a desktop appraisal, but they'll do a drive-by appraisal. So they drive by the house, take pictures of it, compare it to the most recent sales. We've got so much information online with the photos that you all take, when you're selling the homes, and really, we can get a really good feel for what a home is worth, not needing to send an appraiser in a house. On FHA loans, we have felt a little bit of backlash. The biggest thing, FHA, VA, and USDA loans, minimum credit scores for most lenders have risen from what they were 3 or 4 weeks back to what they are today. For example, our minimum credit score for those loans, call it mid-March, was 600. We've had to increase our minimum credit score to 640. As an industry, most mortgage banks and lenders have increased it a little bit higher to 660, and in some cases I've heard 680, which we haven't had happen to us yet. That could come up down the road. Now, jumbo loans, it's a little tricky because
hang on, let me ask you something on that.
Yeah.
With FHA and VA, FHA's raised their credit score.
Yes,
I'm assuming that's in a new application, not an existing application.
correct, yes.
Okay, so any new applicant that comes right now through you guys, let's say,
Yes,
you are requiring them to have a 640
it
credit
is a
score.
640 today. Yes, it is.
Now, I've before in the past from working with you guys, you have helped buyers who haven't had the credit score yet where it should be
Oh, absolutely.
get it. So you guys are still, hey, they raise the
Oh, we
score,
still
but it
have
doesn't mean you
hope,
can't
yeah.
buy anymore.
No, we have the tools to where that we run what's called Credit Expert, see what we can do to improve your score. If you're in that level, definitely contact me directly, and we'll work on it. And get you to,
I want the viewers to know, hey, if you're under a 640, which
don't give up.
Yeah, don't give up. There is a way to fix it
Yes.
or come up with a plan to get you to the right
Absolutely.
score and take
Yep.
advantage of the good rates and all that.
We have really good tools to help work on your credit and tell you what to do to go in the right direction. Definitely.
All right. So I'm sorry, I just wanted to bring that up.
Yeah.
I want people to know, hey, we're going through a tough time, but there is a way as long as you want to go out there and do it. We're not forcing anybody to do it, but if you've been on the fence and this has been holding you back, and you're still planning to buy, whether it's now or 6 months down the road, we're still going to be here to help you. But I just want to explain what's happening right now, because there's a lot of changes, and I'm glad you're bringing it up. So going back to appraisals, drive-bys, does this mean like they don't stop the car? They just drive by and
No, they do. They stop. They get out. They take pictures. They'll definitely still do an efficient job. It's just we'll get into this as we go with technology, but what we have available in the real estate market, technology-wise, it's as good as it gets at this point, to where that we can do a lot of things. And I'm sure you're going to ask about social distancing, so we'll get into that.
Yeah.
But we can do a lot of things and still function business as normal, business as usual, not needing to actually be face to face, shaking hands, and doing everything like we were accustomed to a few weeks back.
So just so I could throw a curveball at you, I've been in the business 15 years. I think you've been in the business 14
years.
14 years. So you remember 2008, 9, and 10.
I do.
There's a lot of loose lending back then.
Yep.
With appraisers now doing the drive-bys or desktops, are we going to see that market again that was so insane back in?
Definitely not. No, because you have to remember. I thought it was crazy when I first started, but when I first started, investors were allowing people to get mortgages with no income verification, no asset verification, 100% down financing with, credit scores as low as 640 for that matter. So it's just a totally different time right now.
So you guys are still, sorry, not to cut you off, you guys are still verifying assets. The lending hasn't changed. Definitely. That part has not changed.
No, that part won't change.
Okay, all right, that's a good thing.
Yeah, well, and I just want to reiterate, verifying income and assets is so important to home ownership because, one, it puts you on a path to have a payment that you can afford. So you'll grow your home in equity, grow your wealth by building the equity, paying the balance down. There's just so much good to it. And also, you're not going to buy a house that you can't afford, and then 12 months later, the home go into foreclosure, be a distressed sale, which brings the value down on your neighbors around you. It's just totally different. It's an apple and an orange.
All right, very cool, very cool. Now, let's just say you had a crystal ball.
Okay.
But you couldn't guess the lotto numbers. You can only guess.
If I could,
I just want you to try to give us what your prediction would be in real estate on the lending side?
Hmm.
Like, what do you predict in the next 4 to 6 months?
Well, I predict, okay, so right now we're in a big boom for refinances. We're going to do a lot of business because rates are really low. And right now, I don't want to say purchases have slowed down because, like I said, on a Monday morning, I'm still coming into 2, 3, 4 purchase contracts, and I'm still doing the normal pre-approvals during the week and everything else. But I foresee a lot of people, because you have to think about this from a practical standpoint. A lot of people are a little bit worried about what's going on in the, in the world. Will I have a job tomorrow? Will I be furloughed? How am I going to pay for this if that happens? How am I going to pay for that? So there is going to be a lot of well-qualified buyers who are probably going to sit out the next few months. And there's also going to be a lot of sellers who wanted to sell to buy a larger home, who wanted to downgrade because they wanted to, get out of the larger home because their kids are out of the house. So many different instances. And I don't want to say it could be a perfect storm for a huge amount of, hopefully more inventory, but a huge amount of buyers hitting the market and sellers hitting the market. But when everybody waits to do something that they've wanted to do and the time becomes ripe again, I feel as if we're going to have a really strong market, hopefully come summertime.
Okay. I like you being so positive. I really do.
You know what? It's the thing about it is it's so different from back when the last recession happened and everything else. It's not the same. It's a totally different animal that we're dealing with.
I was looking at some history. In the last 4 recessions in the U.S., 3 of them, real estate appreciated. It was the one in 2008 that it crashed, but due to loose lending. But
it's an apple and an orange. You can't.
Well, let me ask you this. What would you say to a buyer right now who's on the fence, who's actually, really saying, I really want to buy, but this market is just so unpredictable with COVID-19.
Yep.
What would you tell that buyer?
Well, the first thing I'm going to tell them is I'm not going to try to sell you a mortgage. I'm going to be here if you buy a house in the next 30 days. I'm going to be here if you buy a house in the next 2 years. So buy it when you're comfortable. 1, take a look at your current, financial situation. A, is your job stable? B, do you feel as, like, for instance, if you receive different sources of income, call it commission, self-employment, do you feel as if you're going to feel a little bit of the effect of COVID bringing your income down? And C, is it time for you? Because everybody's going to be different. There's going to be some who will say, this is the best time to buy. There's not a lot of competition out there, so we can go in, put an offer on a house that we're comfortable with and get the house. Interest rates are near record lows. And there's going to be 2 people who are going to want to hold off and wait because, the fear of maybe my employment's going to be furloughed for the next 60 days. So it's going to be both ways, but you really have to think about it yourself and make the best decision.
Well, would the buyer have more buying power right now if they wanted to?
Oh, 100%. Absolutely. Interest rates, think of it like this. If you get an interest rate at 4.5%, and then you get an interest rate at something in the low 3s, you're talking about the difference of, $40, $50, $60,000 for the same payment. So it's, a lot more buying power.
Okay.
Right. And remember, once you get the mortgage on your house, it's a fixed rate. The payment's going to stay the same.
Yeah. Good old 30 years.
Yep, exactly.
All right. So we covered how you would compare the market from back then to now. So we're in a completely different market.
Yep.
Okay. So we were both around that time and things were a lot different. Let me ask you this, and it's a touchy subject.
Mm-hmm.
If someone right now has their mortgage payment, has lost their job.
Okay.
And they couldn't make their payments. Do they have options or no?
Yes. So first, I want to make sure that everybody understands that we're all in this together in terms of what's going on out there and everything else. So there's not one person whose situation in life is totally different than another. Some jobs are different to where that if you're, if you work for, like if you're, for example, call yourself someone who works for the Palm Beach County Sheriff's Department, you're going to be working full time because they're going to need you out there. To whereas if you're a manager or at a restaurant, your restaurant might be closed for the next 30 to 60 days. So everything is going to be different and everyone's situation is going to be different for what they need to do. to make sure they get through this time. My best advice, contact your mortgage servicer. You're going to be on hold for a long time. It's going to be painful, just to give you a heads up beforehand, but find out what options they're going to offer you, because everybody's going to offer different options. Forbearance is out there and available. There are, I mean, I can't, on our behalf, all they've told us is basically if anybody needs assistance, contact our servicer and talk with them to find out the options are available. They're trying to make an online chat to make it easier to where that you can do it that way, but you might not hear back for a couple of weeks. It's just the reality of everybody being in the same boat together. But in terms thereof, if you need it, the assistance is available. Reach out and find out what's available to you.
Okay. Yeah, I mean, look, the whole world is going through this. It's not just us in Florida. It's everybody. So, I guess the message is this will pass.
Yes.
And we're all hoping
we will get by it together.
Yes.
Yeah. I'm sure of.
We have to.
Yes.
It's good to hear. Oh, real quick, is the interest rate tied into what the stock market does?
No. I mean, yes and no, but it's not. But if stocks rise, interest rates generally rise with it. If stocks go down, investors generally, and this is how it traditionally works, not in this crazy world that we're in for the last month, but traditionally stocks go up, bonds go down, interest rates rise slightly. If stock prices are dropping, investors generally flock over to, fixed assets, bonds, mortgage-backed securities, and that causes interest rates to go down. Now, we're in a really unique situation to where that about 3 weeks ago, about 3.5 weeks ago, interest rates were at record lows. And all over the news, it was interest rates are at record lows. And then all of a sudden, the Fed decided they were going to cut the federal funds rate to zero. And a lot of people thought that would make mortgage rates zero, which doesn't correlate. But, we explain it, educate, and go over it. And in that same week that the Fed cut interest rates, or the short-term overnight rate to zero, long-term mortgage rates in most cases rose almost at least a full point, but in some cases 1.5 points, up into the mid to high fours. And it was a really, really crazy week to where that I had never seen anything like that in the 14 years. But even when you look at historians who write on websites that I follow for rates and such, they had never seen that in their career, up or down, looking at charts everywhere.
I'll never forget that Wednesday, because it happened on a Wednesday.
Yeah.
And I called you, and you told me the rate in the morning, and then I called you in the afternoon for something else, and you told me.
I was at a loss for words. I was beat up that day.
Yeah. But have they stabilized now?
Yes, they have. And right now, mortgage rates are mainly driven by the secondary market who purchases mortgages. When mortgage rates are in high demand, that's going to bring rates down lower. The problem that took place over the course of that, 3-4 day window, there wasn't any buyers who wanted mortgages at the low levels that we were writing them at the week prior. So the good news is the Fed stepped in, and the Fed decided to become basically the buyer for the mortgage-backed securities. And currently the Fed is set up to buy X amount of mortgage-backed securities weekly until the market stabilizes, which in essence will keep mortgage rates low for the time being and hopefully the foreseeable future.
Now, something we didn't touch on, and if you don't mind just taking a couple seconds.
Yeah.
Jumbo loans. I've heard a lot of crazy things are happening right now.
Yeah.
Well, can you explain what a jumbo loan is?
Okay.
For those who don't know.
Everything you've heard is probably correct, for one. Two.
I read it on the internet.
Yep. Well, surprisingly, the internet might make sense this time. So jumbo loans are mortgages for folks who go above the Fannie Mae and Freddie Mac conforming loan limits, which in 2020 rose to $510,400. So example, if you do a loan amount above $510,400, you're in the jumbo category. A month ago, I would have told you, okay, you put down 10%. That's, our minimum required down payment. Rates are excellent. You got to have reserves, you got to have excellent credit, things of that nature and such to qualify. Well, to just go back to what I was talking about, there wasn't any buyers for mortgages, and that caused mortgage rates to rise. Well, the Fed's only purchasing mortgage-backed securities on loans that are in the, the Fannie Mae and Freddie Mac conforming loan limits. So now there's not buyers currently out there who want to purchase jumbo mortgages. So what's happened is a lot of the big jumbo players have just suspended accepting locks and new applications. That doesn't mean that they've gone out of business. That doesn't mean that they won't be back. They just, until you have a buyer, there's nothing to sell. So we, in essence, have had to cut back on jumbo lending to where that, in a lot of cases now, we're developing relationships with lenders who will do second mortgages behind the first mortgage to help kind of fill the gap for the time being with not having jumbo loans readily available.
So what you're telling me is, no matter what, you guys have a plan and you have a way to.
We have to. I mean, you have to have a contingency plan because this could last, it could last 6 months. There's no, telling how long it'll take place. So for example, like I have one investor who will do, I know they'll do 250, but I'm not sure at the top end, but they'll do a $250,000 second behind a first, up to 90% of the purchase price. So for example, if you had call it a $800,000 house and you were doing the 510 loan amount, the 510, 400 first, you could do the 250 second and, get as close as you could to having the lower down payment option available for you.
You throw out a lot of numbers and a lot of things. So
call me.
I'm going to make sure that, if anybody has
if you're in the jumbo bucket, definitely call somebody who, knows what they're talking about and can look into it and see what's available, because a lot of things have disappeared in that area. It's not going to go away forever, but for the time being, it's basically suspended indefinitely until this all shakes itself out.
Yeah, so we level out. So the matter is, this will pass.
This will pass. Yes.
We will eventually find our normalcy again. And
I can't wait.
Yeah, no, we're all.
I don't get to see you in person.
Yeah.
We gotta have it pass.
For now, we're just gonna be doing this.
Yep.
Yep. Let me ask you this last question. I promise. So, how has social distancing affected how?
I was waiting for one on that.
Yeah, well, I'm just curious. I mean, with social distancing.
Well, a lot of people have asked this because there's a lot of people who are used to the traditional way of doing business. Call you up, ask to make an appointment, come to your office, go over the documents together, and basically, work everything out. Well, currently that's not available, as we all know. We do need to do social distancing, and the most important point that I feel behind social distancing is it'll help us get past this faster and, in a less painful manner. As a mortgage lender at the company I work for, we have an awesome online system to where that you can click on apply now. It's through our turnkey system. You can punch in the basic information that I need to pre-approve you for a mortgage. You can upload all of your documents to our secured website. And really, it helps me do my job the most efficiently because I get everything sent to me directly, get a notification that you're there. I can go in there, pull things up quickly, get a pre-approval worked up quickly for you and move on. In terms of signing documents, I mean, as you know, electronic applications are done to get the loan application signed initially. I'm sure on your purchase contracts, you guys have a very good setup for electronic signatures on everything to where that we're really well equipped as an industry to handle social distancing.
So nobody has to come in to see you anymore. They could just do it.
No, unfortunately not.
Well, I mean, unfortunately.
They can Zoom me.
Fortunate for some.
Yep.
So I'm just saying.
Yep.
Hey, I really appreciate you taking the time. I know.
Oh, no problem. It's always good.
Yeah, I know how busy you've been. So always, we appreciate it.
Yep.
And stay safe. And we'll be talking soon.
You do the same. Appreciate it, Albert. Thank you.
All right. Take care.